Good morning. Market Day Report is on the air. We're ready to go for another full week of trade. Interesting week, however, because only 4 days left in this month. So Friday, we start a brand new month. But anyway, 5 days of trading, and we start with the overnight trade in corn. What happened? Following lower trade on Friday, the corn market moving lower overnight. December down 2 pennies at $4.17 a bushel. Soybean trade overnight also in the red, 10.14 3/4 off 6 1/4. Wheat market overnight. We'll start with Chicago down 4.5. Hard red was also in the red, down 2 3/4 cents. And spring wheat contracts lower as well. What about the cotton market overnight? Well, cotton's moving higher, 68.48. It's up 25 points. Brian Hoops is president, Midwest Market Solutions. Brian, I'm itching to do this, but I'm going to let you talk about a flash sale, actually a couple overnight.
Right, Tony. Good morning. A lot of news over this weekend. So we did have some flash sales this morning. Corn, once again, 225,000 sold to Mexico and another 229,000 sold to an unknown destination. So great to see these price levels are stimulating some demand for our U.S. products, particularly for corn in this case. However, it's probably going to be somewhat muted because rallies are going to be tough to come by. We have over the weekend updated weather forecasts that go out into at least August the 5th, and they look really good for crop development. Continue to put pressure against corn and soybeans overnight, as forecasts are for pretty moderate temperatures for this time of year with normal to above normal rainfall showers. Also, our U.S. dollar, we talked about last week about that market breaking its downtrend and starting to trend higher. It's higher again overnight, making our products appear more expensive. And then you also had Argentina's president lowering their export taxes on certain commodities such as corn from 12 to 9.5%. Wheat stays at 9.5%. And the biggest drops we're seeing in the soy products, where soybeans went from 33 to 26%, and meal and oil from about 31.5% down to 24.5%. So those are some very large percentage drops for the soy products. All that makes Argentina that much more price competitive on the world marketplace. And so we're going to really struggle here on any type of rally attempts, I'm afraid, because of the good growing conditions, the higher dollar, and increased competition in our world markets.
All right, Brian, for all the news we have that's affecting the row crops, I think we have a little more affecting the livestock markets. We'll take a quick break. When we come back in a moment, we'll pick that conversation up with Brian Hoops. Market Day Report continues in a moment. How about cash cattle last week? We started 230, 231 in the South. Then Packers had to take it up a notch to 232. Then ended up bidding 233 and finishing off what they needed to get in the South. So the top end last week, 233. In the North, 240 to 242, same thing. Had to bid that up to 245, and they got some takers there. Dressed 380 last week, and that's where the cash cattle settled. All right, live cattle futures. This is how we settled on Friday in front of a couple of reports. August, 226.55. That's up 75, higher across the board on all the contracts. Feeders, 305 higher Friday at 331.95. And then hogs on Friday finishing the session lower with the exception of August at 108.57, up 37. So that's cash cattle. But could be something else affecting the market today. Brian Hoops is with Midwest Market Solutions. You and I texted back and forth following the release here. I just wanted to make sure I had my numbers right. I'm surprised cattle on feed numbers. Were you?
Yeah, a lot of reports on Friday, a lot of surprises in those reports. So first of all, cattle and feed numbers are kind of a shock to the trade, a bullish surprise. So on feed numbers, they're an 8-year low, coming in below trade estimates, right around 92% or 98.4%, excuse me, slightly below estimates. The placement numbers were at 92%. That's a 16-year low, and that's way below expectations that we're looking for 98%. That's really where the biggest surprise was. Marketings came in right in line with expectations. So those numbers really going to stand out and give us a stronger opening this morning. I think there'll be a fair amount of buying interest. You also had the cattle inventory report come out that we didn't have one last year because of budget constraints, but we had one this year. And it kind of confirmed what we already knew. Supplies are tight, but they might be even tighter than what we expected. 70-year lows in our cattle and calf crops. Those are some really tight numbers and should give us some strength across the feeder cattle board this morning as well. Final report that came out Friday afternoon, probably the least talked about is the cold storage report, but it was friendly for beef and for pork supplies. We had total beef and freezers down about 4% from last month, and pork supplies over 6% less than a month ago. It shows that we really drew down our coolers more than anticipated. Packers are going to have to bid up for their inventory to start to restock those cooler inventories. So we would expect to see some decent buying interest early part of the week this morning, giving us some strength as traders try and reposition here.
All right, I'm also looking at those cold storage numbers on the hog side. Thought it was interesting. Pork bellies down 17% month over month, 28% lower year over year. And again, that's the bacon here. So definitely could be positive for the hog market as well.
Yes, sir. Should certainly be. We should see some buying interest, I think, right out of the gate, and not only the livestock, all the livestock, pork, the hogs, the cattle, and the feeder cattle.
All right, Brian Hoops is with Midwest Market Solutions.